Welcome back. 17,775 on the Nifty. That is the kind of up move that we're seeing, over 1% higher over there. The mid-caps also doing very well, absolutely in line with what's going on with the frontline index. It's a 1% gain there as well. And the momentum today really led by the metals pack. Of course, what's going on in the Adani space as well as some of the PSU banks that we've been talking about. But let's see if, what's going on in the world of commodities as well. Manisha joins us today. And actually today she's going to talk about gold and sovereign gold bonds. Manisha.
Thank you for that, Pavitra. Well, we have seen the gold prices continue to rise. Last week was the first increase in 5 weeks of decline, and we have seen the prices come back quite sharply, making a low of $1,810 an ounce. It's trading at around $1,855 an ounce right now. So there has been good buying on the back of the fact that most of the Fed officials are now suggesting that the rate hike should be at 25 basis points. Also, the dollar index seems to be steadying now. China growth slightly on the weaker side also seems to have led to some tangible commodity buying that has happened in case of gold as well. And on the positive side, we also have seen the gold bond scheme 2022-23 series 4 now open between 6th to 10th of March. It opens today, and in the recent few years we've seen gold buying via gold bonds actually pick up quite strongly. The good thing is that if you're looking to invest in gold for a slightly longer term in sense of your portfolio, this perhaps is the way to do it. The issue price is at 5,611 rupees per gram, but if you are buying it online, then there is a 50 rupee discount onto this at around 5,561 as well. The minimum permissible buying that you can do as an individual is 1 gram. That is the minimum, and you can go up to 4 kgs on this. Another big advantage into this is that going forward, you will of course gain on whatever gains that we see in sense of gold prices, but 2.5% that you earn annually, which is given into your account biannually, is yet another thing that makes this quite lucrative. In the recent few years and months, we've seen most financial advisors also advise including SGB as a part of diversifying your portfolio in sense of gold for a longer term. Remember, when you buy SGB, you can hold it for 8 years, that is the maturity time, and 5 years minimum, that is the time you can perhaps redeem this as well. So we have seen good traction in the last few months as the gold prices have continued to gain up, and this is the latest tranche which markets do believe has come during the holy time. This is the time that people do go out, buy jewelry, gold and silver, so that perhaps is the reason to get it during this time itself.